Good morning and welcome back to Market Chat with Brenda and Lori. I am Lori De Silva, real estate broker with Remax Elite here in Lynnwood.
And I'm Brenda Alfano, a mortgage advisor with Capstone Home Loans, also here in Lynnwood.
So today's topic. Now, Brenda, last time we spoke, we covered a lot about what a first appointment would be with a real estate agent prior to looking for a home. I want to swing back a little bit and talk about down payments and where they come from. I've had a lot of questions this week from some of my buyers. They can afford the mortgage, but where's the down payment coming from? So Brenda, tell us, where are the most common down payment sources?
Well, there's several options here, but the first thing I want to remind people that is that down payment can be as little as 3% if you're a first-time home buyer. I don't think a lot of people know that, or somehow they conveniently forget that, and they're stressing about that 20% down. While that's a lovely thing to have, don't let that be your stop to buying a home. So don't let not having 20% down keep you from buying a home. So when I sit down with a client, we talk about, what is it, what are you going to use for your down payment and for your closing costs? Right. And do you have any of those funds? So sometimes they're like, well, I have $3,000. It's like, well, we're going to have to find some more because that's just not going to quite do it.
Right.
But so where does it commonly come from? These are the common areas that I've found that from my clients that they're getting down payment. So from their own savings and checking, of course, obviously.
Right.
So from investment accounts. Now it could be investment accounts, right? So they might just have some savings and then in something other than a regular savings account. Okay. So retirement accounts. Now they might have, a lot of people have a 401k from a previous employer that they've left sitting there hanging out. It's not big because they didn't work there very long, or they weren't putting a lot in because they are still young, because we are still talking about the younger first-time home buyer situation. Right. So sometimes that would be a good place to get your money. You get a one-time 10,000 that you can use those funds for buying a home without having to pay a penalty. Anything over that, you would pay the penalty, as well as you're going to pay the taxes on those funds. But you would pay that anyway if you cashed it in. So just think about it as trading one asset for another, and this asset you're actually doing something with, and let it, instead of just sitting there forgotten. It may be earning, it may not be earning. So that's one way. You can also, a lot of employers, 401ks allow you to borrow against them. So I'm going to use, for example, Boeing, because we have a lot of Boeing people around here. Their product is called a VIP, their voluntary investment plan, I think it's called, but they allow people to borrow against that. Now that loan is not counted in their debt to income ratio for the home buyer because they're borrowing their own money. So that's another way. So, and then some people can borrow against their own retirement. I just said that, sorry.
Yes, you did.
I was thinking.
But moving forward.
I know, I got off track there for a second. I looked down at our script, you guys, and that's what happened. So you can borrow against your own. What I was going to say is that Washington State is one of the employers that don't allow you to borrow against your retirement. So you'd always want to check that. And then when borrowing against your retirement, whichever way you're doing it, you may want to talk to a tax advisor or your accountant about before, because that's not something I can guide you on. I can just suggest it. Okay. There's also down payment assistance programs.
Yes, I was going to ask you about that, because I know a lot of banks or companies have different programs, but what programs are available to you?
So the two programs I have available to me right now, the most common are Washington State Housing Finance Commission down payment assistance program. They have several different options. And then we have a product called Chenoa that is also an option. And sometimes with that one, you don't have to pay it back, the down payment, because with Washington State Housing, it is a loan, 0 interest, 0 payment for as long as you have the loan.
Oh, okay.
So, or for until the loan's due in 360 months.
Right.
Like I said, like you said, a lot of banks and the credit unions often have their own proprietary products for down payment assistance. Usually the credit score has to be higher. The criteria is a little tighter than it is with like Washington State Housing.
Oh, okay. Okay.
The other thing that you can get money from that a lot of people don't even think about and it isn't often offered right up front from the
No.
family, but are gifts. So you can get a gift from a family member, you can get a gift from a significant other that maybe isn't going to be on the loan, but is going to live there and so wants to contribute. So a gift is a really great thing to think about.
Right. And I actually recently had a client that received gift funds. Can you tell us a little bit about the details of a gift fund? Because it's not like you can just, here, I'm going to give you money, and
Right.
there is paperwork in process.
Right.
for this.
Obviously, in the mortgage industry, everything is regulated
Right.
and there's a certain way we do everything. The lender will give the gift letter.
Mhm.
It is going to have a certain criteria that has to be completed on it, like where the funds are coming from, literally the name of the bank, the account number,
Right,
the address
right.
of the bank, how much. But what the big part about that gift letter is, they are promising that this is a gift with no expectation of it being paid back.
Right.
That's what's on the letter. So we want to govern how that letter goes out, and then all parties have to sign, the giftor and the giftee. So don't come up with your own. We'll take care of it for you as the lender.
Right. That's what I was getting at. And also, I know when you're using gift funds in an offer, there's a form that you include in your offer that basically discloses contingent funds, and those are funds that you don't have currently available, but you disclose where they're coming from.
Right, it's really important.
Yes,
We
yes.
just had one of those transactions.
We
together,
did actually, and
it
I
got
just
a little confusing there for a second.
yeah, but they are available, and I just don't think people think about that when they're out there looking for homes or trying to figure out their financing. So
And the one thing I just want to wrap this up when we're talking about down payment,
mhm.
again, remember, you also need to have your closing costs.
Yes,
So closing costs can range anywhere from, I'm going to give a really big range, $7,000 to $11,000. And that has to come, that can come from a gift, that can
Yeah.
come from the seller,
right.
but it can't be, it's not, I don't know what I'm trying to say. It's not borrowed necessarily, but it can be that's what
Right.
you can use part of that from the down payment assistance program as well. So say you have half the down payment
Right.
and you want to use the funds from the down payment assistance program, that can also be used for closing costs.
Right.
And seller contingencies sometimes.
Yes. So that's why it's important to get your team together and really talk about what some of the options are that are available. And then as you get into the process of, you found the perfect home, and now what do you do, and how do you write the offer? But all of this is kind of included together. So next week, we'd like to touch base on what happens once you find that perfect home.
The
And
exciting part.
yes, it is. And it's nerve-wracking for some people, but I think that's what we'll talk about next week. So thank you for watching this week.
Join us next week too. Thank you.
Thanks.